Welcome back, everyone, to Crypto Insider, and welcome everyone from 10x Club. Crypto capitulation, is the bottom almost in? Maybe so, but we are buying, and we're buying heavily. Please check out my first video that I made on this channel that was at the beginning of December, where I warned for a huge bear market. Everybody thought I was crazy. Bitcoin was going to 100K, blah, 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 blah. And since last weekend, end of last week, I bought a huge bag of crypto, different projects, because I believe we are quite close to the bottom. We could definitely drop another 50%. It's always possible. We can even drop another 90%. But my strategy is to try and buy on a good point and sell on a good point. Usually that means that those moments are very uncomfortable. It was very uncomfortable for me to sell it was mid-end November last year, because everyone was still bullish. Things were like close to their all-time high. So it's uncomfortable to sell at a good point, and it's also right now uncomfortable to buy. So in this video, I will share with you why I'm buying. That's not financial advice, right? I'm just sharing what I did. What you do is completely up to you. If you are interested to know what I'm buying, because this channel is mostly looking into the state of the market and not looking in too much into fundamental analysis. If you're interested in fundamental analysis, you could check out my Substack and its newsletter, which is Crypto Investment Research and Analytics. And this is also the place where I share my full analysis and my full crypto portfolio. So I just shared with everyone what I'm buying, right? So you could see that here. This is my portfolio. If you want to know which coins I'm buying, you can sign up to my newsletter. And as you can see, I only have 13% left in dollars, right? So I've been scaling in. I've bought on June lows, and I bought now again. I have some dollars on the side in case we go lower. I wouldn't mind, honestly, because the lower we go, the cheaper I can buy more. Until I'm fully invested, and then it's just a waiting game. Do make sure that you store your crypto in a safe way. That's not something that I advise on. Research, Google, ask people that know about these things, and find a solution that works best for you, right? So why am I buying? I want you to check out my video from early December, where I explained how a market cycle works, right? So actually, we should actually go to this chart first. To a market cycle, right? So this is the Wall Street cheat sheet, psychology of market cycle. Well, very clear where we are right now, in my opinion. So as you can see, you have something like a head and shoulders double top here. So this was definitely the euphoria phase. This was definitely the complacency phase. Here, with this huge drop, that was the anxiety phase. Here we could have had a bit of denial, maybe. This was definitely panic in June, right? And right now, and June was also capitulation, by the way, because in June, don't forget all of the capitulations. I mean, we're talking now FTX, but FTX is a late capitulator, basically, which means, most of the companies capitulated in June, right? Because we had Luna, Voyager, Celsius, and a few others. I cannot think of them now, but so most of the capitulation happened in June, and FTX is basically a late capitulator. And if you look at this here as well, what it says: who shorted the market? Why did the government allow this to happen? Right? Well, that's exactly where we are right now. Like, why did the government allow such thing as FTX to happen, right? So this, for me, we're definitely at anger. We're definitely, for me, also at depression phase. I have a Twitter account as well, which is called Blow Off Topic. And if you look at most of the people now, they are super, super bearish. And I just changed my profile picture. I was bearish the whole year, and up till and right now I have more money invested in crypto for the first time this year than I have in dollars, right? So this is me now. I am the one of the first bulls of the new cycle, as I was one of the first bulls of the last cycle. So I found some interesting data. Let's just check the market, and let's just try to understand the big picture here. Try to keep it as short as possible because nobody wants to watch long videos. I understand completely. So first off, where did this bull market come from, right? We had the pandemic, and then the government basically, and the Federal Reserve came with this support plan, and they were printing a lot of money, and that's where the bull market came from, right? So you have to always understand the relativity of valuations, right? So what does that mean? Because it sounds very difficult, but it's not. If you have, let's say you own 100 million, right? Let's say that's on your bank account. And let's say you want to buy a cool car. Let's say you want to buy a Ferrari, right? And a Ferrari costs $500,000, right? This is quite easy for you to buy if you have such a large bank account, right? If you have less money, obviously it's not possible. If you have, I don't know, even a normal bank account, whatever, let's say you have a few €1,000, Ferrari is not, in your budget, obviously, right? And this principle is the same for the market, right? So the more money you pump into this market, the higher the prices become, first in stocks, then in other markets, right? So the stock market obviously went up, because the Federal Reserve prints money and it goes to the money markets, which is basically loans, right? So those are bonds, and those bonds are being traded by institutions, big funds, and they take that money and they put it in the stock market. They put it into indices. They put it into Forex, stuff like that, right? Or into investments regarding, let's say, real estate or big oil projects, infrastructure, blah, blah, blah. So very simple. More money put in the market, the higher the prices become, obviously. So this is a crazy chart because it's like basically going steep up, right? And if we look here at these moving averages, quite interesting. We broke the 5-week moving averages. So this is almost a weekly chart. I do 5 days because market is only open 5 days, so we don't have to include the weekend. So this is the 25-day moving average. This one is the 13 week, right? So that's 65 days. So if you look at the relativity, central bank is like doing QT. Well, they pumped 40% in, right? In a few months when the lockdowns were announced. And now they took out merely 1%. Wow, great. So huge QT. It's not QT, honestly. So if we have to look back, where did the money supply ever touch the 13 EMA? Well, I got news for you. I got big news for you. It did not touch the 13 EMA ever since I have record of this chart, right? Look back. It did not touch the 13 EMA ever, okay? This is the 50 EMA. It's not even gonna come close. I thought actually it was tapping it here, but it's not even tapping here. So it means that where we are right now is already like very steep. And so what we can expect here from the money supply, the Fed is not going to pump money in the market right now. That's not something I believe, but I believe this chart is going to be, kind of flat until the 50 EMA comes a bit closer, right? So maybe for the next, year or two, we're going to have a flat money supply, right? What does this mean? Okay, so this is where the bull market came from, right? And now money is more expensive. The interest rates are coming up. I explained this everything in the video from early December, the price of money. If you don't know all these things, check that video. First video of my YouTube account. So what you have to get now is that inflation is coming down. The DXY looks like it has stopped, right? So what the central bank does is lift the interest rates, and basically because they lift the interest rates, the price of money goes up, therefore the dollar in value goes up, because the central bank, the Federal Reserve, was hiking faster than any other central bank in the world. That's why the dollar has strength. Now, though, they're already at 4%, and their, let's say, terminal rate for next year, which would be, let's say, what would be the highest rate for next year would be, I would say the max rate would be 6%, which would be 2% for the next whole year instead of the 4% they did this year, which means the pace of rate hikes is going to slow down. It has to slow down. So what the Fed will hope is that inflation, year-on-year inflation, will come down. Now, so we had the CPI numbers, and this is also in my newsletter, and it was below what everyone expected, right? So it was 7.7 instead of 7.9. It was 8 before. So inflation is coming down a little bit. This doesn't mean that inflation is completely wiped out after one number like that, but it means that we're on the good way, right? We're on the good way, and hopefully this stays like that. A lot of that is dependent on oil as well, because a lot of things are made with oil. So we have to be a bit careful that oil doesn't explode higher again. So if we look at stock market, obviously this quantitative tightening had a big impact. It created a bear market basically. And now we have to look where we are in the bear market. So in my opinion, we either had the bottom already, or we are about to get a huge dump down. Well, I think, markets move in 5 waves, right? I explained this in that other video. So if you don't know that, check it out, but I will draw it out very quickly for you here. So basically you have double bottom, and then you have 1, 2, 3, 4, 5. So 3 waves up, 3 waves down. Yeah, pretty much market cycle this, right? And this is like the waves you count like this: 1, 2, 3, 4, 5 top, 1, 2, 3, 4, 5 bottom. Okay, so 1, 2, 3, 4, 5. This is looks like it could be the bottom. Looks like it could be the bottom. We have 5 waves down. I honestly expected the S&P to come lower, but it has a lot to do with that large caps, so big companies like Apple, they stayed quite high. Apple really did really well. And the reason I think that is because, one, there's a lot of money on the market, right? We just saw that how much money the Federal Reserve printed. And secondly, the institutions, they flee into the bigger caps because those are usually safer investments, or safer to store your money in than to than going into smaller stocks. And also the other thing is, if you're a big hedge fund like BlackRock or whatever, you want your big caps, like they have a lot of money stored in Apple, right? They have a lot of Apple stock, so they want to keep that price up. So there is also a bit of, let's say, price support, market manipulation happening here. And so this is why the S&P looks relatively high still, right? Compared to other indexes, right? So because the Nasdaq, for example, have seen much less or much more drawdown, right? And many stocks, Facebook, Amazon, whatever, like we've seen quite big drawdowns. Like if we look here at Amazon, stock market was quite severe. This was a quite severe drawdown for the stock markets, minus 54%. And as you can see here, this yellow line, that's the volume, where the volume is the highest. They call that point of control, right? So this is where basically the price stopped and moved back up. So this is a big important level. It's also the last point where the market went up into a bull market, right? So look here, that's actually the same here, because here is actually where they really kicked off the bull market, right? At this point, with a correction here. And you see that here with this green candle, that's a vector candle, it means high volume pump. This here as well. There's a green vector here as well. And to my attention, we have a 5-day green vector candle here again, below this white line, which is the 200 EMA. Here you see the same. Below the 200 EMA, we get the first vector and we're back up in a, let's say, bull market, right? So, and here the same, we didn't see a vector. The vector came later, here. Here also bottomed at the 200 EMA. Here bottomed at 200 EMA. Here, look here, green vector candle, boom. bull market, right? And this was the 2008 crash. Here again, green vector, here another one, bull market again, right? So we have to look at where we at. Maybe we are at this point, because here that was a green vector as well, under the 200 EMA. We came back up into the 50 EMA, got rejected and came back down. Now, this could happen. We could see a drawdown to the 800 EMA, like this is a blue line here, like we've seen before. Yet again, though, I think many of the risks that we had before are a bit evaporating. I've seen the president of China, Xi, shaking hands with Biden. So this, let's say, Taiwan situation is cooled down a bit. Obviously, we do still have Ukraine. That's not going so well, or at least there's still war, right? So there we have to see. Inflation hopefully is coming down, and as long as the dollar comes down, anything against the dollar, the euro, Bitcoin, Ethereum, stocks, whatever, will rise against the dollar, right? Now, the dollar will not just go straight down in a straight line. You know, you could think of a path where, you know, where's my here? Okay, so you could think that we recover a bit of here, and then like here, maybe we put in a double top as well, and then we come down, could be. But as soon as we break the 50 EMA here, that's the point where anything will gain a lot of strength, right? So we've seen Amazon at point of controls, like really technical level to bottom out. Now, so let's go to crypto. I mean, you guys think like, why is he talking about the stock market? But it's very important, obviously, that, you know, the stock market is much bigger than crypto. So the stock market is leading. Stock market gives us an idea of where we are with crypto. So first off, you know, we had the whole FTX drama, blah, blah, blah. I never liked this guy anyway, this Sam Bankman-Fried. Nor did I like any of these shady practices from them anyway. Long story short, always be safe with your coins and your money, right? And don't gamble, don't over leverage with your positions and stuff like that. In essence, I think the easiest way to make money with crypto is to try to buy at the low price, right? At the lowest possible price, and then to sell at the highest possible price. And then you have to understand what is low, what is high. Well, now we're like, the whole market is 75% off all-time high. That's obviously a much better point to buy than when the market is at all-time high. So this is something to take into account. Now, let's forget all the crypto cowboys. That's what I call them, like people that are just constantly thinking of like some stupid coins and Ponzi schemes that are useless. This is not what crypto is for. Crypto will be huge, like sort of similar like revolution as the internet was. And one of the first things that's going to happen are CBDCs. So here you can see how many countries are involved in CBDCs. So almost the whole world. CBDCs are basically digital dollars or digital euros that live on the blockchain, right? So same as Tether is a stable coin that lives on the blockchain. The digital dollar, digital euro, and any other currency They will live on the blockchain. They are programmable, so you can make rules. You can actually do QT or QE with them. There's a lot of possibilities. And there's also a lot of dangers that it's, let's say, too controlling. So they have to put that into the right way that everyone has privacy and freedom in a way. So let's hope that they make the right decisions there. But the point is, though, that once the CBDC is there, crypto market will explode. And digital euro is expected in 2026, which is only 3 years away, basically. We're almost at 23. So this is the basic fundamental analysis for crypto. Then beyond that, there's a lots of crypto projects that potentially are involved into that space. That's something you can refer to my newsletter and check out there what it's about. Newsletter is paid, but I think it's worth the money. I also do free posts, so if you feel like, no, I don't want to pay for that, that's also completely fine. So Twitter, if we look at the order book, I took a snap yesterday when we were basically at the bottom or close to the bottom, and this is a snap of Binance, Bitcoin USDT, and I really like how this order book looks now, right? You can really see there were no orders here, right? So this blue is where there were no orders here, right? And CZ, or let's say Binance market makers, are basically the ones that rule this market. That's clear now after FTX is filled, and they are buying heavily. So this is also another proof for me that I'm like, okay, we should pay attention, right? And they dropped these orders in here and they really held up the Bitcoin price. People talking about crashes and this and that, like exaggerating. Like for me, it was clear that Bitcoin would come to 16,000 because there were a lot of long liquidations at that point. I also tweeted about it way before. You can go look it up on my Twitter if you don't believe me. I'm not going to look it up right now. And so this is a good sign for us. This is a good sign. That doesn't mean that we cannot go lower, because they do want, people to sell into their buys, right? But the point that you have to understand is that this was a crash, but it was stopped, right? It's not like the FTT token from FTX that went from $22 to $2, right? That's a market that has no buyers. That's just a single candle down. Same what happened with Luna. Here in Bitcoin, as you can clearly see in this order book, there are buyers. And these buyers are, we've seen big whales buying, we see the Binance market makers buying. So this is something to take into account. I need a bit of water. So, and then if we look beyond that, we need to look at the Bitcoin options market to see, what are the institutions doing? How does the Bitcoin options market look? So a quick overview. We have always at the end of the year, so this is 30th of December, we have a big options expiration. So this is very important. I think, the Santa rally kind of thing, I don't know if you know, but like many people always talk about Santa rally, and it's usually because of the Bitcoin options. It has nothing to do with Santa. So Bitcoin options, very simple, allows you to buy Bitcoin or sell Bitcoin at a certain price. Buying is a call, and selling is a put, right? So if this is the biggest option expiration, the one in November is also quite big, but let's focus on the end of the year. And if we look at the end of the year, well, this is the one from November, right? So then we have to look at where are a lot of shorts, where are a lot of longs. So basically a market maker, so the options dealer that sells these contracts, he wants to stay above the red lines because that's where people that are selling make money, and he wants to stay below the big green ones, right? So right now that would actually be more or less where we are right now. Like max pain would be 17, 17 and a half. So we could potentially see Bitcoin sort of ranging until the end of the month, yeah, end of November. But we could also dive into here, right? 17 and a half, 18 potentially. But if we go to the end of December, we can clearly see that you want to stay above 17K, and but basically you could opt to get all the shorts out, right? So you basically, if you are, let's say, wrong with a contract, the contract is worthless. So if basically that's how you need to read this chart, right? So let's say Bitcoin price is 21K, right? On 30th of December. That would mean that all of the red bars are from below that are zero, right? And only you have to pay this big green bar, but you don't have to pay these green bars. So you only have to pay this green volume against bigger red volume. That's what we call max pain, right? If you look at the put open interest, it's less than the call open interest, but the put trading is picking up, right? A lot of people are bearish right now, and they're buying puts. So I think this is good news. I think definitely Bitcoin could definitely be 19, 20K by the end of the year. And then once this is expired, let's go just quickly check into January, end of January. Look, then we have super low volume. We can go up. We have space to go up. So here you can see that again, 25th, right? There's a lot of put volume. These red bars are very high. So like ideally we're for the market maker, we're 19K or higher. So you can also follow me on TradingView. For example, did a link analysis, which was also quite clear that we would come down. This is when price goes sideways for a long time, this is clear accumulation, right? It's kind of similar as here, and at some point price will go up. It can take very, very, very long time, right? It can take a very long time, and you need to be super, super patient. I said also back in November, but also back in January, wherever, I said that Bitcoin would face its apocalypse that we are having right now. So here we have the market cycle again. Okay, so we have this channel for Bitcoin here, which is also quite interesting. So we have these 5 waves up, 1, 2, 3, 4, 5. This is Bitcoin against the SPX, so the S&P. And you can see that we're already at support right now. Like this was always an interesting area. Resistance, resistance, flipping into support here. 1, 2, 3, 1, 2, 3, 4, 5, right? So it's very interesting, interesting level here. Also at the bottom of the channel would be very interesting to see if it can hold here. However, I'm a bit more bullish on Ethereum, honestly speaking. Also against the S&P. If we just draw a very simple fib, where now we are at the 1.618, which is the golden pocket, usually very important level. And it looks like we are holding support here as well. This was resistance, this as well. And that's kind of flipping here into support. So that's a good thing. We could also recover still this vector candle here to fall on the volume, same as Amazon did, which would mean that Ethereum would fall back to 750. That's definitely still a possibility, but I would compare that with last bear market where Ethereum went to 90, and if you would have there bought at 180, I don't think you did a bad job. So you also need to think in a long-term sense. And still, there's a lot of money in circulation. There's a lot of money on the sidelines, right? Which means that especially for new markets like crypto, there's a lot of upside potential simply because there's a lot of money. If you look here against the log of price against the bull market, so that's the 50 SME, that's doing quite good of a job because that's a bullish divergence. It's much closer to the bull market support band than it was before. So Ethereum and many altcoins are showing relative strength. You can see that here as well. So here you have total 2 market cap minus some of the stable coins, right? And you can see that the altcoins are holding up essentially. Also around the 1.618 again. So that's very interesting to see. And if you count waves here again, 1, 2, 3, 4, 5. So the question is where are we gonna land? Maybe we're gonna go a bit lower. The point is though that I want to point out is that if you type in USDT on CoinGecko, you can see that the market cap of USDT right now is much higher than it was, let's say, 2 years ago. Or USDC, right? Also another stable coin, or DAI, another stable coin. So if you would go and check how high these market caps were here, is the last time we're now at the February 22, 21 levels, right? And if you would look at how many stable coins were in circulation at that time, you will see that it's much less than it is right now. So again, think the stable coins are like the Fed of the crypto, right? So there's much more stable coins. There's a lot of capital on the side that is willing, they will FOMO back in. What would happen if the coins would move up like this? Everybody FOMOs back in. Here right at the top, probably gonna have the correction and then go back up again. Now I'm not saying that I'm not saying we're gonna go straight back up. Like what you should expect is basically sideways, maybe a bit lower, sideways, lower, sideways, frustrating you, and at some point will go up and take off basically, right? So that's something you need to take into account. You need to have a lot of patience, right? And if you're gonna like panic sell here, or if you cannot sit through drawdown, then investing is not for you, right? Last chart, Ethereum. Basically, if you compare Ethereum with the last cycle, right now will be the timing for bottom, right? Time-wise. And Ethereum also the 618, 2.618, golden pocket. Personally, I would have loved to see Ethereum coming back here into these vector candles here. I'm not sure if it's going to happen. Why? Because Ethereum will we'll work with a lot of big institutions. So I honestly think that there are a lot of institutions buying right now and that are holding the Ethereum price up. I think that's it, guys. Like, I think last thing that I want to say is that, let's say, let's say you buy now, whatever. Let's say, let's take Chainlink, right? Chainlink was $50 at the top of the bull market. Now you buy it for, let's say, $5-6, right? Obviously, it's a good price. But now, let's say if Chainlink falls to $4 and you lose 30% of your portfolio, it's much more impactful, right? So every dollar compared to $6 is much more, percentage-wise, much more than every dollar would be if the price would be $50. So you have to get used to the fact that your portfolio will swing a lot, right? Like, actually, I lost a lot of money actually by buying this week. Really, like some coins really went down like 20% still. Now they're back, your portfolio swings like up and down 20%. You have to be comfortable with it, right? Because this is not the time to look at gains. This is the time to be patient, grab more, whenever the next crash, let's say, happens, I will buy more. And then I will just be patient, Then I will just be sit back, relax, and let the market do its thing. Diversify, DCA in, exactly what I said in the first video that I made on this channel. And that's it. I hope this content is helpful for you guys. I want you all to win, really. And if you appreciate this content, give me a like, give me a follow. That's always cool. I'm not going to post every week because I don't think it's necessary, because you get just too distracted by all kinds of things and news and blah, blah, blah. Keep your focus long term. If you're a long term just holder, keep your focus long term. I think it's much better. But again, you should do with your money and your portfolio what you want. I'm not a financial advisor. So that's it, guys, for today. Thanks everyone for joining this video, and I see you all on the next one. Ciao.